You're listening to chartingwealth.com for Wednesday, the 19th of September, 2018. We see that stocks are up for the day, bonds and gold are down. Now, of course, we have available for you Charting Your Way to Wealth. It is our book in its sixth printing. If you've not ordered it, please do so. It's the way that you can help support the channel and all the work we do, and it will also tell you everything we do here, explain to you our two main methods of entry and exiting, and how we think what we do on a daily basis and what all these charts mean. We also have some good training that's available too. You'll see links at the top of the page as I go through this that will offer you all sorts of trainings, learning how to read charts, just sort of the simple beginning course. So please take all that, Heikin Ashi candlesticks, you name it. We've got it all there for you at chartingwealth.com. Let's jump into these markets. Where do we always start? Always start with the S&P 500 and always start on the weekly chart. What do we see going on? S&P up for the day, 0.54%. Derivative oscillator continuing to lose momentum on the weekly chart. Price percent oscillator is going more and more to flat. Now remember, the market peaked out for the week ending the 31st of August, and it has not reached that high since then. So far this week, we have a green up candle, price movement well above the weekly trend line. Now we go from the weekly to the 2-day. What do we see there? 2-day continues to move up. This is the first day of the latest 2-day candle. It will end, of course, on Wednesday. But again, it's another green open box candle, no wick on the bottom. Now, we're still in a confirmed down move, however, so we don't have a trade at this point. We got to wait until the 2-day's moving in the same direction as the weekly. 2-day still confirmed down. We see the derivative oscillator actually is gaining momentum heading down. And we see that the price percent oscillator is about flat. So we'll just continue to watch. When you don't have a trade, what you do is you watch and you wait until conditions are right for jumping in. Remember, stupid money is lost. Smart money is made. What do we see going on the 4-hour chart? Well, it crossed over going up in the morning. And we saw more up movement in the afternoon. But look at the derivative oscillator. It's losing momentum and price percent oscillator is flat. So again, nothing on the S&P. We'll wait and see how things shake out. Now, the Qs, remember, down hard yesterday. What we see going on right now is, again, up 0.82%. But we do see that the price percent oscillator is trying to flip over negative. Derivative oscillator is now going negative. And what do we see? We see that price movement has moved below the weekly trend line, which is important. We are going into what looks like, so far for the week, a doji, which means, of course, indecision, tending down, and we can see that from our indicators. We go from the weekly to the 2-day, and of course, the first candle, the first half of the candle is a red down candle pushing through. Now again, this is Heikin Ashi candlesticks. Even though the charts were up for the day, Heikin Ashi candlesticks measure average pace. That is down. We see that the price percent oscillator is gaining downward momentum and the derivative oscillators heading down. We go from the 2-day to the 4-hour, and of course that's where you see the up price movement sort of bouncing off the weekly trend line, but still negative on the derivative oscillator and the price percent oscillator heading down a little bit. So again, those of you who did, again, off the charts, you off of our standard way of doing things, jumped in yesterday. Of course, things were quite nice. Still hasn't moved above where you jumped in, but we'll continue to, and again, for those of you who didn't listen to that, go back and listen to it. We didn't recommend jumping as we didn't have an actual weekly vertical crossover going down, but some of you wanted to practice it. And of course, one reason we have the rules is because the rules tend to work. Now, maybe at the end of this week, we'll have a weekly vertical crossover and you can feel safe jumping in on an inverse move on QQQ. And again, that's the NASDAQ 100. Let's go from stocks to bonds on the weekly. What do we see? Well, we had a weekly vertical crossover going down, did we not? And we're going into our third week of strong down movement. 2-day was in the same position. We go from the weekly, and again, we see derivative oscillator gaining momentum, price percent oscillator spiking down. See the same on the 2-day chart, first day of this latest 2-day candle. And again, We are well below the 2-day trend line. Also, derivative oscillator gaining momentum, price percent oscillator likewise. 4-hour chart, what do we see there? Well, of course, 4-hour chart was down in the morning and down in the afternoon. Your jumping in point, of course. Some of you may have tried to jump in yesterday. Things were actually moving up there in the morning and in the afternoon, but things turned over today. Did you jump in for the afternoon candle? Afternoon, of course, that looks beautiful. We see that the weekly vertical crossover is working. Price movement is well below that 2-day trend line. And as soon as we get more movement on the weekly, of course, we can start drawing a weekly trend line. But again, looking quite nice on TLT. Again, like we say, that's the magic of the weekly vertical crossover going either direction. So we go from bonds to gold. We keep hoping gold's going to shake out and start moving up, give us an entry point. So far for the week, looks like we just have sort of almost a doji, not even a green spinning top. Derivative oscillators losing momentum. Price percent oscillators heading up. Don't have a crossover yet. Will we by the end of the week? Well, there's going to have to be more price movement for that to happen. 2-day chart, what do we see there? Well, it's been in a confirmed up move since back on the 24th of August. Really more of a sideways slide, but we can see the derivative oscillator losing momentum while that price percent oscillator continues to move up. Price movement is above that 2-day trend line. Now let's take a look at the 4-hour chart. What is it doing? It is actually trying to cross over, going down again. Just a little bit of movement down for the day, 0.16%. So we'll continue to keep our eye on gold and see if we are at a bottom, just sort of sliding along the bottom. And if at some point it will turn up. When it does, we'll be ready to pull that trigger in a practice trade. Folks, that's where we are as we end the day on Tuesday, go into Wednesday, the 19th of September. Thanks again. We love to hear from you. You can always write us, chartingwealth1@gmail.com. Thank you for everyone who's purchased the book. Don't forget, at the end of the month, we're going to have that special quarterly chart training for you. We're preparing it now, getting ready to pull that trigger when the month ends. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.